Hey everyone, welcome back for another deep dive.
It's great to be back.
Today, we're going to be diving into a piece called Seven Things You Must Know About Investing.
Yeah.
And, as always, we're going to try to tease out some insights to help all of you listening make smarter financial decisions, plan for the future, all that good stuff.
Yeah, and these 7 points are a really good roadmap. Whether you've been investing for a long time or you're just starting out.
Absolutely. Yeah. So let's just jump right into it, huh?
Yeah, let's do it.
So the source starts off by saying that investing isn't about winning the lottery or hitting the jackpot.
Right.
It's about building long-term financial security.
Right.
It's more like building a house, brick by brick, slow and steady wins the race.
Exactly. Yeah, and, just like building a house, you need a solid blueprint.
Right.
And, with investing, that's your financial plane. What are your goals? Are you saving for a down payment on a home? Are you saving for retirement? Are you thinking about early retirement?
Yeah.
All of these things will kind of play into how you invest your money and how much risk you're comfortable taking.
Okay, so first we lay the foundation. We've got our goals.
Right.
Point number two is all about kind of gathering those building materials.
Right.
So the source really stresses the importance of knowledge.
It's true.
It even says learning is the most valuable asset when it comes to investing.
Yeah, it's very, very true. Knowledge is power.
Yeah, but where do you even start? There's so much information out there. It can be kind of overwhelming.
Yeah, for sure. But there are a ton of resources available.
Mhm.
Websites like Investopedia,
Uh-huh.
they offer free courses on all sorts of investment topics. You can also subscribe to financial newsletters
Well, yeah.
like The Motley Fool or maybe like a Wall Street Journal digest, just to kind of keep up with market trends. And even listening to podcasts like this one can be super helpful.
That's true.
Mhm.
Yeah, we try to make it as easy as possible. So, we've got our goals, we're arming ourselves with knowledge, but this source warns us about kind of letting our emotions run wild,
Oh, yeah.
especially like fear and greed.
Yeah, those can really mess things up.
Right.
Absolutely.
Yeah.
You have to remember that the market is like a roller coaster. There will be ups, there will be downs.
Yeah.
If you react impulsively to every little dip or every little spike, you're going to end up selling low and buying high,
Right.
which is the opposite of what you want to do. So, having a rational plan and sticking to it can really help you ride out those fluctuations.
Okay, that makes a lot of sense.
Yeah.
So diversification.
Yeah.
This one's always been a little bit fuzzy for me.
Okay.
The source compares it to like having multiple paths on a journey.
Right.
Can you break that down a little bit more?
Sure, yeah. Think of it this way. You wouldn't put all of your eggs in one basket, right?
Right.
Diversification is kind of the same thing.
Okay.
It's about spreading your investments across different types of assets. Stocks, bonds, real estate, things like that. So that if one investment, let's say, underperforms, the others can kind of help cushion the blow a little bit.
Right.
So it protects your overall portfolio.
Okay, that's a really helpful way to visualize it. So point number 5, start investing today.
Yeah, get on it.
This one's kind of a, kick in the pants, but the source really emphasizes that time is your greatest ally when it comes to investing.
Absolutely.
I think a lot of people, though, they kind of put it off.
Procrastination, yeah, it's definitely a big hurdle for a lot of people.
Yeah, but it's really important, I think, to understand the power of compounding.
It's huge.
Can you explain that a little bit?
Yeah. So basically, compounding means that you earn returns not just on your initial investment, but on the returns that investment generates.
Oh, wow.
It's like a snowball effect.
Okay.
So the longer that your money's invested, the more it can potentially grow. Wow. Okay.
So even small, consistent contributions can make a big difference over time.
So even if I can't invest a ton of money right now,
Right.
starting small is still better than nothing, right?
Absolutely.
Okay.
The key is consistency. Think about it like exercise.
Mm-hmm.
You don't have to run a marathon on day one. A brisk walk every day can lead to amazing results over time.
I like that analogy. And that kind of leads perfectly into point number 6. Investing for a life you love.
Yeah, exactly.
It's a good reminder that money is just a tool, right?
Right.
It's to help you achieve your goals, to live a fulfilling life.
Exactly. It's not about hoarding wealth.
Right.
It's about creating a life where you have the freedom to pursue your passions, spend quality time with your loved ones, maybe travel the world.
Yeah.
Financial security gives you choices.
Okay. And finally, the source wraps up by really emphasizing the importance of patience.
It's true.
Building wealth, it's a marathon, not a sprint, right? You got it. Don't get discouraged by short-term market swings. Remember your long-term goals.
Right.
Stay the course, continue learning, and just be patient. Patience and consistency are key.
Okay, so wow.
Yeah.
This deep dive has been packed with, like, so much valuable information.
A lot to unpack.
We covered, planning, learning, managing those emotions, diversifying,
Starting early.
starting early.
Aligning your investments with your life goals.
Mm-hmm.
And being patient.
And being patient.
It's a journey.
Yeah.
And like any journey, having a roadmap and knowing the terrain can make all the difference.
Couldn't have said it better myself. So we want to hear from you. What resonated most with you from today's deep dive?
Yeah, let us know.
Let us know in the comments. Shoot us an email. Until next time.
See you next time.
Bye.
Bye.